Hey traders, Raghee here, and in this free recap video we are going to take a look at a market that probably isn't being talked about enough in front of tomorrow's FOMC, and yet it really is at the heart of so much of central bank policy, which is the currency of the US, of course, the US dollar. And the US dollar, with where we are right now within the economic cycle, the cycle that the U.S. is in the early stages of, which is something I call a D cycle. Now, you can call these cycles whatever you'd like, but generally speaking, there are 4 cycles in any market, and it's going to have to do with central bank policy, it's going to have to do with growth, and it's going to have to do with inflation. And when you look at the combination of those 3 things along the lines of an economic cycle, you'll realize we're in slowing growth, we're in falling inflation. I mean, look at the crude oil market for any evidence of that, right? And then also take a look at central bank policy. We're in the trickiest window right now in central bank policy as we go into this D, which is the toughest phase for risk appetite. It's the toughest phase to own high beta momentum names because that's what everyone is fleeing, and you'll see that for the most part over the past 30 to 60 days. So that part, look, that's no news flash. So what do we know about this cycle? It's not done. There's going to continue to be demand for the dollar. So some of the other aspects of which markets we're going to roll into, we've been talking about in both these free and premium videos, and I'm going to dive into that in the premium. But let me talk about one of the main markets right here and a huge point of contention, which is why would the dollar continue to go higher if the FOMC is going to signal to the market that we've got, yes, one more rate hike for the December 19 meeting, but then chances are we are not going to see a rate hike into 2019. In fact, as I showed you all in the previous recap video yesterday, how I look at the message from the FOMC via the statement, how I look at the Fed Fund futures via the CME Watch tool, the FOMC tool from the Chicago Merc. I showed you all that yesterday. Now, what does that mean for us tomorrow? I am looking for the dollar to move lower. All right, not for the dollar to just go into a downtrend. That's not it at all. I'm just looking for the dollar to move lower within likely this area. So even if we break the support of the wave, which we haven't since the uptrend reorganized, even if we were to break the support of the wave, this is still support down here, it would simply be oversold support, and it would be fading weakness into support. All right, so I would fade this. I would buy this. This is a buy. Even this area is a buy. Now, the challenge now is how much further could we go down? How much further could we go down? One of the tools that I use, and it's one of my favorite tools, it's a tool called AutoChartist, and I've been using this tool for many, many years, and this is something we use every day. AutoChartist says we should be expecting about a 0.65, 0.63 move to the downside. That would be basically the upper end of a 68% probability. That would, by the way, put us pretty much, based on more or less where we are right now, that would put us pretty much close to the bottom of the wave here. The wave meaning those 3 lines that I use to gauge dynamic support in a trend. So that would put us down near the lower end, right about the 96, just below that 96 level. Now, am I expecting a day that's even more volatile still? Absolutely. So I'm going to factor in an additional 20.20, and that gets us right up against that 95.80, 95.85. So I want to be ready for the dollar to pull back, pretty significantly into this area. We could move more than that. This is just pretty much where I would expect kind of a minimum move for the dollar. Now, how do you trade this? If you're a Forex trader or if you're a futures trader, good news is because these are all being traded against the dollar, you have a lot of choice. You even have ETFs to choose from tomorrow. What are they going to be? They're going to be the Euro versus US. We're going to be looking for the Euro FX futures or the FX market itself to move higher by approximately 100 pips from the low. So I'm going to be looking minimally for approximately a move to 1460, which would be a fantastic overbought zone to short from. At least that would be an initial level. In fact, I'm willing to short clear up into 115. We have the same type of plan for weakness in the US dollar versus the Canadian dollar. A pullback here. Now, we've been long the Canadian dollar for some time. This has been a trade that's been very good to us, and we're looking for another pullback. Now, the idea of playing another pullback is essentially this: US dollar weakness, moving this market lower. Now, if you're trading futures, not to confuse the point, just be aware that that would be a bounce. It's the same two currencies. It just happens to be the order in which they are printed that determines the direction we're dealing with right now. The last one, and it's a little tricky because, of course, we have the Brexit shenanigans built in here, but I think that Theresa May has kept her job means the downtrend stays intact. One of the things that I mentioned before the vote of no confidence last week, I said if she loses her job, we'll see weakness, but ultimately strength after that. If she keeps her job, we will see some strength and then ultimately weakness. And since the market is maintaining its downtrend, we'd like to see the dollar lose ground against the pound, move higher, and then we will short that, expecting the market to continue back down. So again, while everyone's got their eyes on whether or not Powell is going to save the equities markets, and we've already positioned ourselves for this, right? The other place that I want to start thinking about is how do we play the US dollar against the Canadian dollar, pound, and euro with tomorrow's announcement. Again, we're looking for some near-term dollar weakness that we are looking to buy into. And I'll see you in the next update.